if you are a Tesla shareholder, you have to understand that this type of volatility, it just comes with the game. The chance that the stock could go up 100% in 90 days comes with the same exact chance that the stock could capitulate 50% within 90 days. Tesla's down another 6.5% today, and not only are we testing this weekly market bias, which is where we thought it was going to pull back to, maybe worst case $340, we have actually hit the bottom of that market bias band. This is normally the absolute lowest that big money will allow the stock to pull back to when it's trading above the market bias before they start buying. You can see that the 2 times prior, we had a run of nearly 45% within 49 days, pulling back to test the lower band once again and running a second time 140%. In yesterday's video, we stated that just because we were pulling back into a discounted range, that we were not going to pull the trigger on any call options or aggressive positions. And the reason for that is if we zoom in on the daily chart, the BX trender is still showing lower lows. This aggressive selling within the buy-sell pressure is very, very bad. That means that big money is not coming in at all. And what we really need to see minimally is a higher low on that BX or a shift to light red. That is our first indication that we could be seeing a bottom. Now, something I did do today was actually open up a cash secured put position on Tesla. We're going to go over this trade and why I opened it, but I'm not going to go over the specifics of how cash secured puts work. If you guys want to know how they work, just go ahead and go down to our free course library. Go check out the cash secured puts masterclass. Essentially, we are selling puts which are bearish to a bear, meaning we are on the opposite side of that person being bullish. Now, the major difference here is that we have a couple of ways that we can win. We picked a strike price of $312.50. And so this is a very important area because if we end up closing this Friday below $312.50, I am forced to buy over $624,000 worth of Tesla shares at an average price of $312.50. Now, here's the deal. If we zoom out to the weekly, you will see that that would be basically the best price we've been able to get on Tesla in the past 71 days. From there, I would set a stop loss around $290 break, which would be worst case a 6% loss. But if Tesla bounces, as I'm suspecting, that would be nearly a 60% return to the upside if my shares fill. And what's nice is in the interim, I'm also going to get paid $4,300 in premium. Now, that's not a lot. That's like 0.82% return on capital, but it's still something. So best case scenario is that price closes this Friday over $312 and I will make about 0.85% return. But worst case, if we end up closing underneath my strike price, then I'm just getting to buy Tesla at a ridiculous discount. And here's the thing, if my shares fill, I am not buying calls. My plan was to get leap calls if the daily BX showed a higher low, but I decided that I'd rather just own shares instead of maybe buying $200,000 worth of leaps. Now, if price snaps right back up, which is what I think is probably going to happen here, the 1 hour is very far from this market bias, and I think that we could see some sort of relief bounce in the next couple of days, at least back up to $340. That will kill the option that that person bought from me, and I should be able to get most of that premium probably within a day or two. And then I will just continue to roll those cash secured puts. And if I decide that it's looking really good and the daily BX makes a higher low, then maybe I will look to get into some calls. But the thing that really worries me here are these 2 gaps that we have from October and November. If this weekly market bias cannot hold and we end up breaking that $300, $290 level, then there is about a 75 to 80% chance that we will just completely capitulate all the way back down to where we were trading in October of last year. And so I'm not worried about being wrong on any of these trades. The main reason that I'm going in is simply because of risk versus reward. If I end up filling at $312, I have a downside of anywhere between 4 to 10% with an upside of anywhere between 60 to 70%. So that is at worst case a 6-to-1 risk versus reward ratio, which I am more than fine with. It's a probabilities game. And if we have those types of risk versus reward, we're going to do really well. And as we said, worst case scenario, if that level breaks, then we are just going to sit out for a couple of months, wait for price to come all the way back down to $224 and look to hunt for a position down there. Now, the last thing that I want to say is a lot of people I've seen are really upset as Tesla shareholders about Elon's involvement in politics. And I'm not telling you what to believe. Like, I don't care about any of that. But I do just want to bring up the point that nobody cared about his involvement in politics back in October, November, and December when the stock nearly doubled. And so, if you're going to be okay with it back then when it's going our way, then you have to also be okay with it when it's not going our way. And I'm not saying that he should or shouldn't as a CEO of a public company. I'm just simply saying that if you are a Tesla shareholder, you have to understand that this type of volatility, it just comes with the game. The chance that the stock could go up 100% in 90 days comes with the same exact chance that the stock could capitulate 50% within 90 days. And so what you can take away from that is to always use proper risk management. And that's why even though I'm risking $600,000 on Tesla shares, you have to remember that last year alone, we made almost $1.6 million just from Tesla. So from a risk standpoint, even if Tesla were to go bankrupt and I would lose all $600,000 of that capital, it's less than half of what we made last year. And I bring this up not as a flex, but so that you can understand the inner workings of risk management, because I believe the risk management aspect is what really gets lost here and lost within the financial space. If you're part of our Discord community, you probably know that because we go a lot more into actual position sizing and how much I'm holding of everything and all of the funds. But most of the time, I'm not going in with the same position sizes each and every single time. If you've been watching me since June, we had a massive position all through September, October, November. But then I started scaling out very, very early, which, yes, inhibits the profits if the stock continues to run, but it also allows me to remove stress and risk because I'm pulling risk off the table the further we move from the market bias and adding more and more risk the closer we get to the market bias. If you want to learn how to set up the market bias, the BX Trender, or any of the indicators that we use, our courses to all of them are down in the description. They're completely free. And if you're somebody who's been trading for at least a year or two and you want to get access to all my real-time trade alerts, all the stocks that I'm holding, we have trading bots ranging from swing trading to day trading to even weekly holds. The link to our private Discord community will be down in the description. Thank you guys for all of the support, and I'll see you tomorrow.